think, we have to assess where we are. Let me start by saying that the issuing of a long-term bond is something which, I pursued, and I was in the capital markets. And you would have heard me in those days talking about the need to extend the tenor, of our bonds. But we were a country that couldn't go into the capital markets since we issued the first bond, which, by the way, we took off the markets with the sinking fund, and the refinancing strategy that we put in place. Why do I say that? Let me give one example. We were often treating the budget in terms of the deficit. So revenue minus expenditure, and then you come to your deficit. How do you finance the deficit? Most of the time we went to the Treasury bill market, which is the Bank of Ghana auction, or let's say Bank of Ghana short-term market, which is for liquidity. And you raise a Treasury bond, 1-year note, and 2-year notes, and then you finance the deficit. But if you consider that your revenue, by the time you pay wages, you pay debt service, you pay statutory payments, your tax revenue is gone.
About 95% at times.
It's gone. Actually, in some cases, if you add a bit of other, statutory or international obligations, you are about 100% plus already.
Okay.
Then what are you financing? You are financing the capital budget. And there's no merit, whatsoever in borrowing. So I'm saying it's an objective. Few countries issue century bonds. The U.S. issues mostly 30-year bonds for its infrastructure. So 2025, we are able to do 20-25-year bonds. Considering that the 12 major projects that we wanted to do, from the railways to the gas processing plants, which I was talking about under CDB, the Volta Basin projects, the Western Railway Line, the Eastern Railway Line, the 2 corridor routes, all amounted to 3 billion under the master facility agreement which we agreed with China. So maybe if we set our sights, well, we may not need 50 billion to begin.
Which is what I was coming to, because you mentioned how if you add the 50 billion to our current debt to GDP, 125%, and you add it to the about 70%, you get 195. Do you think that if we were to reduce the amount of money we were going to borrow in the first place, then it will be practical?
Well, it's a practical thing to do, because the questions I'm asking is, when you are going to the bond market, you do something called a roadshow, and you invite a number of investors, and these are the sort of questions they ask you, to assess your ability to pay, because if they are going to give you money, they want to be convinced that you pay. And I recall that, what made the 2016 bond possible was, for example, the fact that we had established the sinking fund, the fact that they knew we were in the market and we were buying our own bonds, and, we had just gone to Tenfield to turn the valve. And the sinking fund was going to bring in more money for debt repayment. So I'm talking about, it's not, yes, it is what I understand to be the, managing finances and how you borrow, but it's also the practical questions which investors will ask you, when, you go to borrow, just as your bank would ask you, the questions about your income.
Okay.
And if there's another source of income, how much is the wife bringing in? Do you save any? Is there an account in which you put it to be sure that you are not just saying that, the madam or maybe even the gentleman these days who has a shop, is also banking and will contribute to the payment of the mortgage facility also.
So you feel that looking at the terms of the loan, the amount of money, how much we owe already, and the other facilities which we are looking at getting is not really practical now?
Yeah, I say it's a practical question. I don't have all the information. Remember, governments have...
But with what you have, do you think it's practical?
Yeah, I already said that it's not practical.
Okay.
Yes.
Okay.